mining has never really left my professional environment. I think tokenization could be a route to faster and better term financing than what they face now. So I think this is definitely changing the industry massively. The industry is finally becoming more open.
We're living in a future for sure.
Yeah. No, the future is here, and it doesn't really care what happens next.
Yes.
One thing I can tell you: vast majority of commodity stocks will always go through cycle. Their volatilities will always be higher than the stock market. There is no way to make it completely clean. So you do need environmental assessments. All of this is necessary, but right now those permissions take longer than building the mine itself.
Hello and welcome, and we're here at Holistic Investments, and I'm your host, Constantin Kogan, and I'm delighted to have here an amazing guest, Mikhail Zeldovich, who is a former private equity and commodity executive. Now he's a VC, and he's invested in resource minerals and resource tech. Mikhail, really good to have you here with me.
Thank you. Very, very happy to be here.
I'm excited, and really, we're going to talk about a lot of things that are related to critical minerals, geopolitics. We're going to talk about investing and how it's potentially related to tokenization as well, right? But before, we have also a traditional thing that we have to throw a legal disclaimer that this content is for informational purposes only, and you should not construe any such information or other material as legal, tax, investment, financial, any other advice. So now we're off the hook. No compliance officer, no
Absolutely.
legal. I'm really excited about this topic, and we're going to dive into it. But before... Traditionally, I want to learn about you. You have an amazing career, like really exciting. You now live in Singapore, and that's
right.
That's where we met first time, actually. For those meeting you for the first time, right? What's your background, and how did you become involved in critical minerals space?
It's a funny story. It's a long story and a short story. I mean, the long story, a very, I think, typical American immigrant story. Came here with my parents when I was 14, learned English, did college, did law school, then probably somewhat unusual, went to work for the U.S. government for a while as a trade negotiator and a lawyer.
What year was that?
That would have been 2004, 2005. And then dropped all of that, moved to London. That's a whole other story. And I got a job with Boston Consulting. And then through a whim of HR, I got called into HR my first week at the job and was asked, okay, we usually don't guarantee where you go, but we'll take wishes. Do you find pharma or mining more interesting? And I said mining. And next day I was at Rio Tinto, which then is the second largest mining company in the world. And for the past 18, 19 now years, one way or another, mining has never really left my professional environment.
Do you remember in retrospect what led you psychologically to answer like right away mining?
Not really. So I think I was not particularly interested in pharma was probably the main consideration. But I also remember distinctly thinking, I've been in a mine site once on a tourism, almost kind of like tourism thing. And I kind of found it interesting. So that was it.
Well, BCG is an incredible firm. I know there's very high standards to even get there, right? So what was your journey after? Let's talk about what happened next.
So BCG is a wonderful organization, but I think even with a wonderful organization, you might not have the perfect fit. In my case, I did not like the fact that no matter how many recommendations we make, at the end of the day, the client can do whatever the hell they want, and you're not going to be able to influence them. So I knew that I wanted to do something a little bit more hands-on, but had no free time whatsoever. It was 9 a.m. to 9 p.m. You got your weekends off, but you can't really look for work on weekends. So I remember I went to a recruiting office 6 floors up, just got into an elevator and dropped off 6 copies of my CV. And that turned into a private equity job. So did that for several years. There was a bit of mining in it. We were a generalist firm, but I did a few mining deals. In particular, I saved us from a terrible mining deal, which I credit myself with at least figuring that one out. And then, let's say in about 2011, I ended up taking a job with a large commodities trader, where my main job basically was business development across ultimately 16 different markets. And a lot of that brought me into interaction with junior miners who were trying to raise money so that they could start mining. And this is quite a typical niche for a commodity trader where you help them get to production by saying, look, I'll give you money, but you have to promise to sell your first 3-4 years of production to me.
And you were still in London?
No, I had to move to Moscow, and then I spent most of my time in Moscow and in Russia and in Central Asia during that time. I opened my employer's Moscow office, Kazakhstan office, a few other ones. And during that time, I probably spent a good week every year sleeping in tents with geologists, actually looking at deposits. I had my own geologic hammer. In retrospect, not that I was particularly useful that way, but on the business side, it did help you to see where you are, figure out logistics. It was quite cool.
Did you go to Kamchatka?
I did not get as far as Kamchatka. I went to Russian Far East, Kazakhstan, Mongolia, Vietnam, a few places.
Right. So was there a specific moment when it became clear to you that, like in your career, that minerals are becoming a strategic weapon in geopolitics?
That's a good question. I think I had a realization that could be a leverage. I did not think that they could be weaponized at the time. It was around 2015, 2016. I was spending quite a bit of time in Beijing because most things that are being dug up in Eurasia end up in China, so we were selling them. And I realized at one point that some of the concentrates, such as the first form of production, let's go back. You dig up ore, you beneficiate a little bit to become a concentrate, then you ship it to a factory where it slowly becomes metal. So these concentrates were going to China, and the guys buying it from us in China, I noticed they were buying from everywhere. They were buying from Africa, they were buying from Latam, and I started thinking, why is this stuff not going to the US? Why is this not going to Europe? Because these places are closer. That was my first inkling that somebody had a near monopoly. But still, I did not think it would be weaponized. That probably came around 2020 when I first started realizing, actually, this is a leverage. This is one hell of a leverage.
How do you balance your geopolitical perspective with your role as an investor?
I try to get geopolitics to help me be a better investor, because I think a lot of investors don't think in geopolitical terms, or they see an announcement in the press and they dash to do something very, very quickly. I try to take geopolitics in, process it, then account for the fact that a lot of it, pardon my French, is BS, and then try to see if it's worth doing something about now or waiting.
And then you often say critical minerals are China's most powerful lever in the trade war. So why are minerals even more important than like tech? Like we know that there is a huge Cold War to amass all the chips now. So in your opinion, who is winning this war now?
It's a good question. Look, I don't have an authoritative answer on this, but the answer I would give, we try to cut China off from chips. As it turns out, because
when you say we're talking about United States.
Yes. So as it turns out, what you need to catch up to us in chips is basically two things. You need talent and you need some chips so you can start with them, right? Mm-hmm. Turns out you can smuggle the chips and you can hire the talent, right? But if you don't have a mine or if you don't have a processing plant or you don't know how to process a particular mineral, that's a longer catch up. And then what I would say is we totally could have caught up. We just did not prioritize it as a matter of national policy. China looked at the restriction as a matter of national policy to solve. We don't look at it that way. We're only starting to. So I think that's the big difference.
So many people believe that China dominates simply by mining, right? But the reality is different. Can you explain China's supremacy in processing and why that's the real choke point?
So this will probably be the longest answer that we're going to have in an interview, but I think it's important to know it. I'll paint you a slightly scarier picture. I just did this last Monday at an event in Delhi, and some people came to me afterwards and told me that I sounded very gloomy, but I think objectively, we need to know what's going on, right? So you have mining here, and the Chinese dominating probably 50 to 60% of battery metals, mining 70% of rare earths. When you look at the processing of those things, right, you're going to end up with 75, 80% dominance on the processing side. For heavy earths that make very important magnets, it's 98%. But actually, that's not the complete picture, because now we can extend in both directions. Who makes the world's cheapest mining equipment that enables faster, cheaper mining? Only the Chinese. Now the Indians also, but mostly the Chinese. So they dominate the mining in part because they spent 1/5 of the capital expenditure to start the same small mine as we would have to. And on the other side, where do all these critical metals end up in? Well, they end up in electrical vehicles, 76% last year were made by Chinese companies. 80% of world solar equipment last year was made by Chinese companies. 70% of wind plants were made by Chinese companies, and 98% of these rare earths magnets. So it's not 2 vertical segments. It's 4 vertical segments that are dominated today by the Chinese.
Wow.
That's the full picture.
It is quite scary in a way, but let's talk about the other numbers. First of all, they're staggering. The China directly controls, basically what you're talking about, more than 50% of all the battery metals mining, but 70 to 80% processing, and then 80% is remining, right? And then we're talking about 90% processing and heavy magnets. So how did this happen so quietly? What went wrong that in the US being such a dominant superpower in the world, they completely close their eyes on this important sector?
I think part of it is the fact that we are largely a true market economy. This stuff became more profitable to do somewhere else, so we didn't bother sinking government subsidies into keeping it in the US. I think the other thing that happened is actually the Chinese succeeded, as often happens, because they needed to. Let's say if China has no good nickel deposits, their lithium deposits are very poor, et cetera, except for rare earths, which they do have the best deposits in the world. They had to go out there and they had to take over other people's deposits quickly in order to build an industry. In rare earths, it was the opposite. They started in a dominant position. They removed all environmental regulations that would have hampered it, because it's a very environmentally polluting process to make process rare earths.
So they pay the other price for this, right?
Yes, they definitely they paid a price for it, 100%. For battery metals, they tried to outsource that to Indonesia, to Africa, to Latin America, to Australia. For rare earths, they are paying a price domestically. And interestingly enough, this is why at one point they started becoming concerned, which is not something that's talked about in the press much. China is concerned that they're running out of their best rare earths reserves, which is why they're increasingly going overseas even for those.
I'm also curious to hear your opinion about what other things, why it's so hard for US to catch up even now? Because do you think that's because of the China's centralized power, and it's so much easier to the Communist Party said that's what we do, let's go, and here we have a democracy, so there's a lot of debates, or there are other aspects that we don't take into account?
No, look, that's definitely a part of it. I've always said, not always, for the last 5 years, I said, look, what we need to solve this problem is easier regulation, so you can start a mine faster than in 10, 12 years, and technology, which thankfully we're good at. But now I look at the administration's efforts to try to fix things as they are. And I have to say, okay, so we've now started investing in mining and exploring. I'm not going to weigh on whether or not we invested in the right companies or not, but we've started doing it. At least there is action, people are paying attention. Well, that's great. But at the same time, we canceled the largest solar project being built in the United States, the largest wind project being built in the United States. We removed the subsidy for EVs, which currently are running at 45% year-on-year sales decrease versus the year before.
By the way, can you explain this really quickly, why that happened? Because that shocked a lot of people.
We've just removed the massive future markets for the minerals into mining of which the government is investing. If you don't have a market, then why are we investing in the mines? So the great advantage the Chinese had once they achieved leadership, when you dominate the market so thoroughly, you can start experimenting. You can spend a ton of money on R&D to have better batteries. You can start manipulating world pricing. So if some upstart actually tries to compete with you, you dump prices for 6 months, they're destroyed, but you're fine because you're so big. So I think the country with the bigger market long-term is going to win. And let's face it, it's not the oil gas guzzlers that are full of battery metals and new technology, right? It's the electric cars.
So what misconceptions do Western policymakers still have about supply chains, mining timelines, and processing economics?
I don't expect policymakers to be experts in mining, but I would have expected them by now to know that it takes more than 3 or 4 years to start a mine. So when I hear government officials, not just in the US, say things like, look, we just have to start this mine from scratch before my politician goes for re-election. Unless you make your term limits 10 years, it's just not happening, right? This is still something that people genuinely think. I can't tell you exactly which country, but in my previous job about 10 years ago, we took a very unusual job with a large industrialized nation whose government, at the presidential level, asked our CEO to source rare earths for them. And because we have feet on the ground everywhere, we tried. And I had 3 countries that I was biz dev in charge of business development for. We sent in, I think, 17 pitches. None of them went anywhere because none of them would have resulted in them being ready by the next election cycle. So I think what's wrong, I think the election cycle is what's wrong, right? They want results very fast. And yeah, I think the only other thing I would add to it is processing is a very tough job in an industrialized, rich nation because there is no way to make it completely clean. So you do need environmental assessments. All of this is necessary, but I think politicians have not figured out that right now those permissions take longer than building the mine itself. That's a problem because then we cannot compete with China.
For someone who is listening for this, like for the first time, and they don't understand the process, what's the short version of it? Like, what's the fastest way you think the mine can be already processing?
In a way that's not damaging to the environment, or that is damaging to the environment? That's the big question.
Let's do both options.
I'll do both. I'll take Indonesia, and while I'm going to simplify this, obviously, but in Indonesia, if you have early indications that there is nickel underneath a chunk of a rainforest, you either get a very quick mining license, or you maybe even get a license to clear the timber off first, and you chop it down and you start digging, sometimes without your license even being in place. At least that's been my, let's say that's maybe it's hearsay, but that's what I see. So you could get from discovery, which I would define as commercial grade nickel in the ground after a few drills, to first production in probably 2 years, two and a half years. Okay. We have wonderful deposits in the United States that are in the middle of their second decade of environmental approvals, NGOs suing. Again, I'm not saying that there is no value in protecting the environment. There definitely is. I do consider myself a greenie. But at some point, we have to decide, are we willing to sacrifice our national security to this? What is reasonable? Is it reasonable to now say, okay, you have 6 months to do an environmental assessment? It cannot take 2 years. I think that there is definitely middle ground. Actually, it's very funny. If you go to Australia, which is the mining capital of the world in many ways, between states, there are great variations as well. Like in Western Australia, the reason it's mining capital of Australia is not because it has the best deposits. It has the easiest regulations to deal with, I would argue.
We're going to get there. So now we actually slowly, that's actually a perfect transition because I wanted to ask you about opportunities, right? Because obviously for people who haven't been exposed to this topic, like it's one of the most interesting part, like, first of all, where they can invest. If someone like wants to exposure to this sector, like, I have a lot of people who are high net worth individuals and they're looking at this. Where should one start? Like, so what would you advise? What are the most like, juicy opportunities right now?
So I would say, without discouraging the retail investor, I would definitely say, if you have the ability to invest into a mining fund, go with that because you're going to learn so much along the way that you're going to be able to do it much better on your own a year and a half later, and you're going to get a diversified exposure, right? And there are some specialty mining funds like RCF, Orion that are quite good.
How can you find a mining fund?
You can find it by Google or
ask you.
No, or ask us. Me and a few of my friends. We have a site in the making that's going to be. We'll debate it for a long time whether to make it mining tech, or both. We're going to make it both, but we are putting it together.
Is this correct way to think about it? Like, is there like a concept of like fund of funds in the mining industry, or more of a directional fund?
No, so there are several funds that specialize in investing in assets, but they're now also diversifying into doing a little. So, for example, RCF, Resource Capital Funds, they used to invest in mining assets. Now they also have a small mining tech fund on the side because they're realizing it's necessary. But I think that aside, look, there are some fantastic ways today to learn about mining. I just finished for one of my startups building a mining Bible from nothing but ChatGPT and Gemini for the new Salesforce. And let me tell you, it is very, very good. Okay. It's actually made some pretty good investment recommendations. But what I would say is, look, fundamentals matter. And I think in order to do mining investments, you can start with the majors. They provide a ton of information. If you want to go to juniors, you need to do a little bit more digging.
What would be the top 3 important metrics, or like I would say facts or questions that you would need to ask a fund to do your due diligence, right, as an investor?
I think the funds are so few that you just look at the track record because they either been through a commodity cycle and survive or they're gone.
And by the way, what is a tenure like? How long is it? 10-year fund, or how long is a lockup?
My guess is most of them probably operate in kind of a general hedge fund VC slash VC timeline. So you're probably going to be
Like
fully
7 to
invested
10?
in 3-4 years, out in 10.
Got it.
But again, I don't recommend that being the only long-term thing you do because you don't have to pay the fees. And my guess is they have so many restrictions in terms of, well, we can't invest in this company, it's too small, this one in the wrong jurisdiction. It's just, I think it's a good tool to learn to start with.
Any minimum check that you think is like good to think about it?
I'm not aware. I haven't invested in them. I work with them, so I know that they're quite competent, but it's not something that I've delved into, to be honest.
Got it. But probably similar like accredited investors, that's already a qualification that you can go. Got it. Coming back to the rare earth equity swing, right? And so I wanted to, like, they're widely based on politics, right? And again, I hate to go to the politics side, but I need to ask you, what should investor think about in terms of volatility?
Look, I think it's a question is, are you a tactical day trader or are you a long-term holder? So, for example, let's take rare earth stocks. Let's take MP Materials, for example, right? It's not the fact that the U.S. government plowed $400 million into them. Yes, that's great, but it's mining. It takes a lot of money. But in their case, for example, you have to look at the fundamental point of the fact that U.S. provided them a price guarantee. So there are very few businesses that have a price guarantee of how much their product is going to sell for years to come, right? So now it's unlikely that MP will fall through the floor because they're guaranteed a price floor, I think, was 60% higher than the prices were at the time when the investment was made. Then you look at some of the smaller rare earth players who have not started mining, in some cases have not raised money to build a mine, have no such agreement in place. These are going to swing according to what the latest Truth Social or a Chinese government announcement is. In which case, as a day trader, yes, great, watch for those. Because one thing I can tell you, vast majority of commodity stocks will always go through cycle. Their volatilities will always be higher than the stock market. But to hold long-term, look at fundamentals.
So you've said that the producers like MP Materials, right, they may be obvious winners, right, so to speak. So what makes them attractive and what risks still remain?
So I think, the price floor, I think, is the most attractive thing that they have behind them. Obviously, political support is very important. They are now almost the first mover in the U.S., so there are very few other people at the same level. So that gives them a lot of opportunity. The risk remains that China dumps the prices. If the Chinese government decides that they really want to try for a monopoly in this game, they can dump the prices for a long time. How long will the U.S. government support MP3? I don't remember how long the contract is, but it's not eternal. So there is definitely that risk. But actually, there's a risk on the other side, is that actually so much money from investors is going to go into the sector that there's not going to be a shortage. And even within, so I would say, if you look for winners, look what has the smallest number of producers trying to come to market. Where the goodies the most rare. So, for example, heavy rare earths, almost no one has them. If you're going to have a strong team that's building a mine in those in the West, that's probably a long-term winner.
How many teams do you think are there in the world, out of curiosity?
Today, outside of China?
Yeah.
Probably 24.
Wow, that's not a lot.
On rare earths to be taken seriously, yeah, that's at most. So there's MP in the US producing, and Lynas in Australia, which took many years and massive Australian taxpayer financing in order to get started. And today, if you want to buy rare earths in the West and not touch China, that's probably 2/3 of what you can go after that's been processed. And I know from dealing with one of those, they're not easy to deal with because they're a near monopolist in the Western world now, right? So they have massive, massive leverage.
And do you count it just to the fact that it's the entry barrier is so high, right? And if you were to, like, I would say, decipher it for a 5-year-old, right? For people who don't like myself, I am not expert in this industry. So if you think about the fact that, okay, well, there's a team that they think they might have a chance. How much capital and how much resources do they actually need to have to even try to compete with MP or others?
Yeah. So, I mean, the interesting thing about this business is that the expense increases exponentially the more certainty you have of success and the closer you get to production. So to establish what they call a maiden resource, which is the first time you could go, look, I have something that's been proven. There are very competent geologists that say, I have a resource. Then you have to turn that resource into a reserve. So depending on how big the territory is, how big the deposit is, now you're talking probably about a few tens of millions of dollars. So it's not a lot. And then you're going to have to what they call drill out a resource. So you can establish exactly how much you have and put it on your balance sheet. That could cost you $100 million. Then you want to build an actual processing plant. A sizable processing plant is probably going to start at $500 million. I think Lynas in Australia spent over $1 billion building it. But of course, once you know you have the reserves, you know the numbers work, then what you already have is a profitable business where your only risk is future resource price.
Coming back to the matter when it comes to battery metals, we talked about nickel, cobalt, lithium. What fundamentals matter most?
You mean in terms of where to mine them?
Yeah, where to mine them. I mean, there's a huge, you mentioned, right? There is a huge, I would say, surge in the prices because of the demand, right? And because we're talking about like electric vehicles, and I think objectively it will probably increase even more. So they're becoming like a very valuable commodity of the future. So what are the fundamentals that the people who are learning this process need to know about them?
So it's actually very interesting because the prices for these materials are not as high as they should be, given the fact that we know there's a coming shortage. Like there's a curve in what we know we need to build and in how much we're extracting. And we know they don't meet up. And yet the prices are not that high. Like if you look at something like lithium, it's now recovered. 6 to 9 months ago, it was nowhere. Like people are closing down lithium plants all over the world. So the main thing that we have to keep in mind is volatility. They're incredibly volatile because China has the ability to manipulate the prices. So for lithium, for example, I would argue the Chinese managed to manipulate a global price of lithium to stay far lower than it should have been. So when you're investing it, I think the first question you have to ask is how susceptible is this commodity to price manipulation? If you're actually buying a commodity. If you're investing in stocks and you're looking at it longer term, what I would say is the factors you have to look at is how competent is the team, how high is the political risk of the jurisdiction where the mine is, and how good is the deposit. These, I think, are the three main factors. If you can find all three, man, that's fantastic. You're usually going to find two. And then you have to ask yourself, what's your political appetite? Like, what's your appetite for risk? Are you more comfortable with taking the risk on, let's say, Zimbabwe's government nationalizing the mines and telling you, so sorry, you don't have any shares anymore? Or are you more comfortable with the fact that these guys are new, but they look really competent, they sound really good? That's a judgment call.
I think it's very interesting because, right now what I was reading about, lithium has like around 26 million tons in identified reserves, cobalt 25 million tons in terrestrial resources, and then nickel 130 million tons in identified reserves. The funny part, what I'm just thinking, it's more of a question now that we don't know the real numbers because let's say someone like China, they don't let independent auditors, right? So they can actually make up some numbers, again, to your point, to manipulate the market. How do you think this situation is going to evolve, right? What would needs to happen in the market that we have some kind of more transparency and auditability?
It's a very good question. It's a complex question. I would say the one area in which China can tell us whatever we want to hear is in rare earths because most of the deposits are theirs. When it comes to battery metals, because most of them are in third countries, it's harder for them to manipulate what's in the ground. But the key thing is, let's say that there's 25 million tons of identified cobalt. At what price? Because if price goes down, it suddenly becomes 15 because the 10 become unprofitable to extract. So the main manipulation happens around at what price do we have reserves? I think that's the big variable. One of the startups that I work with now extensively called Atomionics, we use a quantum sensor in order to map underground resources. And our ultimate ambition is to build a large Earth model, to map the entire Earth's crust for where all the resources are so that we all know exactly what they are, how easily they are extractable, and not waste our time going after things we should not be going after. So actually, we have an ambition of ultimate transparency. Will we be able to solve this single-handedly? No. But I think some sort of a global understanding of where the reserves are is becoming necessary. But I don't think there's any unified effort towards it. And you're right, because it's so susceptible to manipulation, a lot of parties are not going to want to be a part of it.
Yeah, it's tough. And I was thinking about like, so we were talking about institutional investors coming into play. Like I want to also dedicate like at least a few minutes for retail investors who are excited. Maybe they don't have like, tens of millions of hundreds of millions, but let's say they want to invest a few $1,000s. They can go into buy stocks. Like I've looked at Albemarle for lithium. There's ALB, Albemarle, like SQM, Livent, like, LTHM, like, again, not a financial advice, but then there is nickel stocks, like, cobalt stocks, but there's very few, right? So what would be, or they can buy ETFs, right? To get more diversification, or futures, right? What would be your advice, right? Just to like for a beginner, like with smaller checks?
No, I think in terms of actual mining companies, I would first learn where the most volatility is. So for example, in lithium, if you build a chart over the last 5 years and you put like top 20 resources in terms of most profitable and least profitable across everything, mining, wheat, oil, you're going to find lithium in the top 2 years and in the bottom 2 the other 2 years. So it's almost guaranteed that it's going to come up, and when it falls, it will go down. So if you're going to have pure lithium stocks like Albemarle, for example, or Pilbara, or same for copper, let's say if you have Freeport, which does almost nothing but copper, you play the cycle. I think you wait until there's a dip and you buy. I think for these kinds of stocks, it works. Mm-hmm. I would allocate some to the majors because they're stable, like Rio Tintos and BHPs of this world. They're not going to lose your money in the long term, right? They know exactly what they're doing. They're massive. They're very, very competent. It's not going to produce you outsized returns. So I personally, if I was starting, let's say, and I had $50,000, I think I'd put 40% to the majors. I'd put 40% onto the single commodity majors like Albemarle, like Freeport. Mm-hmm. And I'd save 10% for the juniors, where you just have to do your reading and you just have to figure out, educate yourself.
That's incredible. Like, and do you think we're now in a good cycle to invest, or you would wait until like, some kind of drop?
So for example, I went long lithium a year ago because lithium dipped. It's now recovered. Mm-hmm. I'm going to wait for the next dip because again, every metal is different, right? So for lithium in particular, we are now creating batteries where we're phasing out nickel because it's very expensive. We're not going to be able to phase out lithium, not of larger scale grid batteries. Mm-hmm. So on lithium, the demand is going to be outpacing supply. So in lithium, I watch for every dip and I buy.
How do you identify the dip?
Well, actually, you don't even need to put in the lithium pricing. You just look at guys like Pilbara and Albemarle. When their stocks dip, you buy. Okay. Because they only dip for one reason. Lithium goes down, they go down. I see.
And when you mention dip, is this like 5%, 10% movement? What are you talking about?
Again, for commodities, the price shock would be quite substantial. I think, if I'm not wrong, I think if you look at Pilbara and if you look at Albemarle, these stocks have moved by 50 to 70% in the past year. Wow. So these are pretty massive. And I certainly would not advertise putting a lot of your net worth into them because, they are volatile. You think they're on the way down, they could go down some more.
Talking about people are raising eyebrows and talking about Bitcoin like dipped like 5-7%. You're talking about 50 to 60, 70%.
Well, over a longer period of time. But yes, no, for sure. But I think for retail investors that have a good broker, get some equity research reports because actually mining sector has fantastic coverage by some of the brightest people whom I know. JP Morgan, Canaccord, Goldman have always had very, very good coverage. So if you have a broker that can still get those, it's fantastic. You learn a lot.
And obviously there's a lot of open source too.
Yeah, absolutely. Yeah, there's a lot of open source. I would single out two things in particular these days, which is antimony and tungsten. Because outside of rare earths themselves, these have been identified by the US government as being of very high strategic importance to defense and elsewhere. And there are some stocks in this area that are popping, but they're popping not because of the hype, but because they will be permanently higher valued. I'll give you one example is a company listed in Australia called Felix Gold. They have a good gold deposit in Alaska. They've had antimony sitting there on the surface at very high grades for a long time, but nobody really cared. Now they're revaluing whether or not to position themselves as a critical metals company because actually it's a phenomenal antimony deposit. Might be worth more than the gold. So you can find opportunities like that in the junior sector where somebody, again, already has that maiden resource. So it's not empty. They have something. And it's now in a metal that's become permanently important to a big government like US or to the EU. That's a pretty good bet.
And Obviously, we need to touch upon like gold and silver, right? It would be a fun conversation. So they're entering a new cycle. We've seen all-time high. There's a huge demand. I hear rumors that there is actually dedicated like private equity firms that are now buying in billions of dollars to like stock up. Again, U.S. is still number one like in the world in terms of deposits, right? So I'm curious on your stance. Is it still worth buying, or you would suggest like to hold?
It's an excellent question. Look, my gut instinct is that we are, if not at the peak, then we're near a peak. But then what I'm seeing is I see central banks buying. And it's not just the gold bucks, right? It's no longer the housewives in India, which, by the way, are making better returns than most brokers are, because they bought gold when it was so much cheaper. I see central banks buying, and that gives me pause. That makes me wonder, maybe we've got a little bit more ways to go up. These are the most stable buyers in the world, right?
Amazing. Can retail investor realistically find the next MP? Any examples you like I don't know, like Ardea, like Green Tech, Terra, Felix, you mentioned already a little bit.
These are the few of the junior companies that I like. I mean, I think I already mentioned Felix. I think Felix is a good example. Look, in my experience, a retail investor needs to study up a bit and start going to a couple of mining conferences, and then yes, it becomes possible. What you find at mining conferences, I think, if you're a good judge of people, you can measure up the team quite well. I give you one example. There's a polymetallic company, meaning they have a lot of metals, but primary one is copper, called Terra in Australia. I met them on the mining conference. We had a very good meeting. I really felt the team was very strong, but I felt the stock was undervalued because they had a very particular problem that everybody talked about, which is they had too many metals, so it wasn't clear how they would get separated. So they did what's called metallurgical tests. They separated them, created 3 separate products, but no one noticed because they're a tiny company. Like, wait, so the main problem with what they had has been resolved and no one noticed, and the team seems sharp. I'm going to go home and I'm going to buy. And I did, right? And I think they're 3.5x in 6 months, right? So I do think that's for a retail investor who really wants to get into the space, you have to meet these people face to face a bit more.
In terms of new mining technology, you're launching a fund focus on this area, like we mentioned, we talked about it privately. So why is the tech adoption in mining so slow? And what breakthroughs excite you in this?
I think whereas the oil and gas sector had money to invest in new technologies for decades, mining really didn't. It's much smaller. So the DNA of startups coming in and deploying their tech is not there. It's hard. It's only beginning to happen now. I think that's number one. Also, over the years, so many people have promised so many voodoo miracle solutions that didn't work. That is also a very high degree of skepticism. But I do think that it is probably the one area where we are starting slightly ahead of the Chinese, because we have such a strong tech sector where we may be able to deploy technology faster. This is the reason why I think it's so important, right? Mm-hmm. The industry has been quite resistant to this, I would say, primarily because, and I mean, this is true. I mean, I've worked with a lot of startups in a lot of sectors, but getting a mining guy and an IT geek at the same table, it's very difficult to find 2 people who are less suited to talk to one another than that particular pair. And this is where I see me and my friends function. We can talk both languages, so we can bring them to the table. If you ask a mining startup, what's your biggest challenge? It's never raising money. It's getting a mining company to understand what I'm trying to do for them and get deployed.
Very interesting. That's a unique perspective. If we can go back a little bit to tactical investing, because I think there's a lot of things I want to unpack there too. So how do you personally approach the tactical trading around major geopolitical events? Because, we talked about current administration, Trump does some announcement, the price, in our world in crypto, the price can go up and down really fast. China can we have some sanctions, you have some export bans. How does it impact the mineral sector?
So for me, I have probably a list of about a dozen stocks, which I know are very susceptible to these announcements. And yeah, I watch for them and I play with them as the announcements happen, or I put in, buys and sells ahead of time if I think that they're happening. I am not above making 5% in one day and clearing out. That's I think perfectly respectable trade.
Are you shorting?
It happens a lot. Yes, no, I do. I do short stocks, which I think I overvalued and are just hanging in there waiting for some, for some positive announcement because they'll fall even if the announcement never happens. I think some companies are incredibly volatile. The metals company, which is a seabed mining company, I think is a good example. This stock skyrocketed because the White House essentially issued a memo allowing mining in American territorial waters. So even though these guys don't have a single concession yet, I mean, the stock went up, I think, three, 4 times. And then, of course, it plummeted because they're not ready to start mining. It's a very good team and, I think it's a good company. But they're not going to be mining for a few years, and market is not patient.
And then you find out that probably Eric Chop is on the board there. Again, not talking about it,
but yeah. So you have to you have to watch for these things.
Yeah.
The one thing that I will say though is now that the critical minerals are more in the public's view than they were before, you now have a lot of momentum traders who are just doing exactly the same thing. They're watching for the same announcements. So you have to be prepared to take some beating in this right now.
Outside of the mining stocks, where else can investor gain exposure? Like shipping, logistics, ports, supply chain infrastructure, because they're all interconnected, of course.
Yeah, so I think there are very few pure plays on that side, but there are definitely some companies that are more or less dependent on it. So I work with a large group in United Arab Emirates, a large port and shipping group, which, because they have so many ports in mineral-rich countries, there's a massive flow going through them. And I have noticed, I think their stock does get affected by whether or not commodity prices are up and down, because when they're up, the flows are bigger, and when they're down, the floors are lower. But there's not a lot, I think, that can be done there by a retail investor. Having said that, I think processing and supply chain for the processing, there are a couple of specialist teams that are trying to raise funds for this in order to invest specifically in that. And I think that that's going to be interesting. I think they're going to start, the PR and sort of publicizing more of what they're doing. So processing, I think, is key.
Interesting. I want to go to the tokenization part, my favorite part. So you've compared, first of all, like just as a linking part, I think you've compared U.S. critical mineral situation to a second Sputnik moment, right? And also, I wanted to learn, what do you mean by that?
Well, the Sputnik moment came, of course, when the United States was shocked to wake up one morning and find out that the Russians sent a satellite into space, and then 3 more before Americans could match it. So that really focused the minds, and yes, we're the greatest country in the world. Why didn't we do that first? And, arguably, by catching up to the Soviet Union, by putting a man on the moon, etc., there was a Sputnik moment, and there was a solution. Everybody actually focused. So I think, that's what I meant. I think this is our moment where, through technology and through national effort, and not just the U.S., but frankly, I think it's, and not even just the West. Like my big thesis is the West plus India, at least. By pooling our efforts together, we can catch up. We can restore the balance in the critical minerals field.
And now, talking about tokenization, I know you're open-minded about it, right? We talked about it in the past.
Yeah.
So do you think that tokenization can become a new vehicle to finance some of the mining projects?
So I think, again, if we just take the United States in particular, and we have a higher participation in the stock market than Europe, let's say, right? So if we focus on the US, I think there are projects in strategically important minerals that perhaps the market is just not well suited to pursue. And until recently, our administration wasn't investing in them directly. And I think there's an opportunity if people are sufficiently informed, they go, okay, well, I can own a part of this deposit through a token without having to go through a not very well functional stock market. And yes, why not? I think for some of the juniors who have particularly good stories, I think tokenization could be a route to faster and better term financing than what they face now. But it would take, I think, a portion of the electorate being energized about this. And then, yes, I think by all means.
And what type of mines and minerals are the best suited, for tokenization?
The tokenization crowd, I think, is more familiar with precious metals. So I think gold, silver, diamonds, platinum, palladium, I think, would probably be the top first candidates.
I mean, we already have seen many projects.
Yes.
Right? And by the way, multi-billion-dollar projects.
Yeah, very, very large projects. Yeah. I think you need to, I don't think you'll be able to do this for things that don't even have a resource or reserve established at least. But from that point forward, I think still the markets don't always work. And I think that this would help, especially those national security dimension. I think that would be quite important.
my belief that all the assets will be tokenized, right? Eventually. But I will ask your opinion about, do you think the commodities eventually will be trading 24/7 as crypto markets?
I think actual commodities, so we're not talking about mining stocks, we're talking, let's say, a bar of copper. I think absolutely, because today it is so much easier to trade stocks of tiny little juniors than it is to trade actual copper flows or nickel flows, which are much bigger. It makes no sense. So I think those are the prime candidates for being tokenized. I mean, obviously, as you know, there's already a lot of it has been done, but it's not yet a big public market. It's individual projects. I think by all means it can and should be done.
And that's already exciting. And what do you think is the biggest misunderstanding traditional investors have about tokenization of minerals?
Well, I am probably more of a traditional investor, so I'll tell you what I've found misleading up until recently. Look, honestly, I mean, for me, I thought that this is an area in which you're going to suffer from poor liquidity, and that's clearly not the case. And I think a lot of people think that Joe, I'm got this token, what am I going to do with it? And second, that a lot of it doesn't have any real backing. You're investing in a fantasy, right? You're investing in something that might not produce for 10 years, which is not necessarily true. And as we know, there are projects where that's definitely not true. So I think those probably have been the misconceptions, which again, I myself have been guilty of.
Which is totally fine. I mean, I'm actually very honored that you admitted publicly. And it's really interesting. We already have about $3.6 billion, according to RWXYZ, in representation of different commodities tokenized, which is, again, it's a drop in the ocean if we compare it to the global market. But it's a good start. Yes, we can see the clear vector to this direction, right? So now,
I guess one thing I add to it is there is a risk again of market manipulation that you think is greater. If you look at, for example, London Metal Exchange, there are a lot of rules about what you can and cannot do. You tokenize everything, then the country with 85% of the world's nickel processing may be able to manipulate the market in ways that otherwise it couldn't. So the question is, what guardrails are going to be sitting on that?
Well, you're right, because immutable ledger only is efficient if the information, the initial data, is verified and we trust it, right? Then it's kind of perfect. But yeah, if there is a monopoly controlling 99% of the market or whatever, 97, right? Then it is a challenge by default. So how can you trust them? Right. That's a good point, actually. So beware of that. Learn the macroeconomics. Well, and that's the point. Let's talk about the macro in the future, right? Yeah. So let's talk about where is this all going? Because which countries will become the next geopolitical winners in the critical mineral side, outside China and the US? Let's talk about other players.
So I'm spending quite a bit of time now in India. I have an Indian client. They're the largest recycler of battery metals in India. I see their future, both them and India, as being very bright, because I think in terms of the depth of expertise available and being able to match China for costs, there is no other candidate. I think that actually there's only one. And so I'm very happy that I'm spending time there now learning, because my learning curve about India has been very steep. So I think India, if it plays its cards right, if the government keeps focus, which they're doing now, on making India independent in the critical minerals sector, by establishing independence, they should actually become a workshop for the world. So I think there'll be quite big winners on the processing side. I think on the mining side, it's the usual suspects. It's Canada, Australia. Especially if these guys streamline their regulation a bit more, they will still be mining powerhouses. Very clearly, Brazil is emerging, even though our current administration, Brazilian presidential administrations, are not on best of terms. I don't know if you saw, but the U.S. government's backing a rare earth project in Brazil because Brazil is becoming indispensable to mining. And of course,
Vale, I think, right? The player in Brazil.
Vale,
Vale, I don't know how they pronounce it.
They haven't gone into rare earth so much, but I think they are now. But now, obviously, ultimately, it's Africa, right? There's a gigantic continent, still barely explored. And again, I hope that some of my mining tech portfolio companies are very heavily now engaged in trying to penetrate Africa for some early surveys to show that the technology works. I think Africa is key, but who's going to be winners, who's going to be losers, hard to say. I would particularly note one tiny nation called Guinea, which is doing incredibly good, incredibly smart things. They're going to be the world's, I think, third largest producer of iron ore within a year or two. It's the world's largest iron ore project being started up there. But Interestingly, they seem to be doing it right in the sense they've created a balance. Rio Tinto's in there. The Chinese are in there. A few other players are in there. They've balanced them off.
What about Chile? I heard SQM is also doing.
Chile in copper and in lithium, Argentina in lithium. Yep, they're going to continue to be strong players. There's not a lot of new stuff happening. They are doing well, but in terms of coming on, they're already coming on from a fairly high base. So I don't expect it to be sort of as revolutionary as some of the African countries.
But again, to be fair, also when I was in commodity space, I know I told you my career started from selling weeds, oil seeds and others. So Glencore was a pretty big player. Now we know that Glencore is a global biggest cobalt, they're very big in lithium.
Still very big.
Their headquarters is technically in Switzerland, but they're like a global behemoth, right? So when we're talking about those countries, do you think they'll be still controlled a lot by Glencore, who is making deals with the government, or there will be more and more national independent players?
So I think globally in general, I would say the pattern is of governments becoming stronger for two reasons. Number one, traders keep getting fined and going to jail for bribing governments. And how do you control governments without bribing them? I mean, that's just a fact, right? There's a Glencore executive trial going on now. There was a Trafigura executive trial, Gunvor, all of these, right? So it's just getting harder and people don't want to go to jail. So that's one reason. The other one, I think, is just the governments are learning from each other a lot more now in our connected age. I see, for example, a number of African governments, Mongolian governments, all went to Chile to learn how did Chile tame the industry. How is it that one of the largest miners in the world is a Chilean company, not Rio or not BHP. So this learning is helping. So I think overall the trend is in that direction. But I still think, yes, the countries without functional institutions of government will still be susceptible to this.
So coming back to if you had to place one big 10-year bet in the space, what would it be?
Indian processing.
Wow.
And that would have to be a long-term bet. But again, I see a country today that's probably at 1/40th of Chinese levels. And I think it's going to get to at least half.
Wow. So they're accelerating really fast, right?
They're starting from almost nowhere. It's 20. I mean, again, in 10 years from now, India is going to have 25% more people than China. Its first generation of EVs will start getting recycled, which means all that metal will have to be refined by someone. It's going to stay in India. Now, so I think the level of expertise, the quality of engineering students, and the government's drive to become independent. I think if I was going to be placing a long-term bet, the risk-reward ratio, that would be mine.
Interesting. Are we heading toward the bifurcated commodity world, China-centric supply versus Western supply with different pricing, financing, and logistics?
Oh, we're already there. We're absolutely already there. The Chinese flows are massive. They are cheaper. It's almost impossible to get into them if you're not Chinese. And the Western flows, even when you're willing to pay more money, sometimes the Chinese companies will not sell to you because they're not allowed to. So I would say it has already been split in two. You will literally hear traders talking about, well, I can sell you this, but it's not going to be a Chinese pricing, and it's going to be at the Western pricing. So I think that's number one. Now, I would actually, again, inject India in there because I had a most fascinating exchange recently when a Chinese commodity trader who I've known for over a decade. So I came to him to source something for my Indian client, something that was very hard to find. And he told me, look, Misha, we've known each other for a long time. We've been to each other's homes, et cetera, et cetera. For you, I could deliver this CIF, meaning at Port of Baltimore, but not to India. They are real competitors. I'll get my head chopped off for selling this to them. Which tells you actually it's maybe even split in three now.
Wow. CIF, I used to know all the GAFTA and INCA terms by heart, by the way. So I actually know what it means.
Well, you've recovered. Let's put it that way.
What could derail the Western strategy and what could derail China's?
The only thing that could derail China's strategy is complacence, which I am beginning to see some signs of, in the sense that I don't think the Chinese are exploring the technology aspect as much as I think they should, given how massive they're. Because why should everything's working perfectly, right? So in the West, I think right now we're doing a lot of the right things as the West, but we're doing them in a very amateurish fashion. We're not deploying our resources in the best way possible. Give you one quick example again: Lithium Americas, don't buy. U.S. government just invested in it. We just invested in lithium contained in clay, metallurgically the single most difficult way to extract lithium. This company is invested into by General Motors. Do we need to invest into anything invested by GM? There's a reason why they didn't top up, right?
Short signal.
So I look at this. We're not very good at deploying resources because we don't have the experience. Number one, and I think the second thing is that we need to understand we're not in this alone. So again, whether it's India, whether it's the Middle East, there are places where energy is cheaper. There's places where workforce is cheaper, where capex is cheaper. So we don't need to have an America-only solution because it will not work. It's okay to have our processing sitting in a port facility in Abu Dhabi, which is something I'm working on right now. It does not, some people will quibble with that and say, well, what if we spoil those relations? We're saying, well, there are countries with which we should not be spoiling relations, and they're not going to spoil them with us because they're not in a geopolitical confrontation.
Got it.
So I think we need to coordinate better, and we need to remember that what kept America as a hegemon for so long is alliances. We need to have mineral alliances.
And that's, I'll talk about with Trump administration, maybe to hire as an advisor. I need to ask you this question, of course. How will AI and the general autonomy, robotics will impact mining productivity and exploration?
So I think it already is doing that. So I have focused my personal investments more on exploration tech to try to help deposits faster. So that's already happening. I'll give you one example. A small Australian startup that does hyperspectral imagery from their own satellites. And because these days a satellite's just a box you launch on SpaceX for like $1 million, they already have 4 birds up in the air with their own special sensors. I gave them a test. I gave them a mine in Oman to map something underground that they should not have been able to see, but they saw it. So now I know that it works, and now we can deploy it in lots of different places. But so that's hyperspectral imagery has been around for ages. What's changed is the other word that you said, which is AI. We now have algorithms that can find things that previously were invisible just because we did not have enough data to interpret what we were looking at. So AI is changing the game massively. I mentioned before my other startup Atomionics. We're trying to build a large Earth model, which would be impossible without the AI advancements for a variety of reasons. So I think this is definitely changing the industry massively. The industry is finally becoming more open. And even you can see at the names of startups that are being brought in: Earth AI, Terra AI. AI is key. AI is absolutely key to this. We can find things faster. We can plan a mine faster.
And there is one thing which I found truly fascinating, which we had in a private conversation when you mentioned that, like, through satellites, you can actually scan, and go very, very deep into the soil without even, digging into it, to identify, the depth, of the soil, and to see the minerals, what type of minerals are there. Can you elaborate on how does it work? And
Yeah, it's a little bit more complex than that, as most things are. But so they're different methods. So one basically relies on the fact, okay, something used to be on the surface. A mineralization used to be on the surface when it formed, but then it's been covered up by sediment. The idea being is that small traces of it stayed. And now with very, very good satellite cameras, hyperspectral cameras, and with very good AI algorithms, you can figure out what are you looking at and where would that place the deposit now. That's one option. The other fascinating option is we've known for a long time that certain plants grow over where certain metals are. Certain plants grow where gold is, some where copper is. But it never tells us what we call the grade is and how much of it is there. So we don't know if it's enough to make a business out of or not. What we're discovering now is if you have good enough satellite imagery, and then if you have good enough AI analytics, you can see year after year what amount of stress is present in those plants. And from that stress, you can calculate whether or not you have a commercial grade of a deposit or not. So you don't see underground, but you see the telltale signs that tells you what's there. And the precision of these methods, again, I've been in this industry for a long time. I find it improving at a shocking pace. Where to give you sort of one idea, and maybe for some of your more focused investors, maybe a cue to go out there and get going. So alluvial gold deposits, which are they're usually on the surface, they're usually formed by rivers and by water flows, right? So they're turning out to be particularly susceptible to satellite detection. My friends have found one in Zambia. Literally, they just send a single geologist, took tests, there's gold, they put in money. 9 months later, they're producing 1.5 kilos a month of gold. They probably make their money back in 1.5 years because it's a very cheap process for alluvial. My guess is 10 years from now, there will be no good alluvial deposits left in the world unless they're covered by forest because you can't hide them.
Wow. So it's such a fast pace.
Yeah.
We're living in the future for sure.
Yeah. No, the future is here, and it doesn't really care what happens next.
Yes, I want to ask you in our closing part, like in a few of the personal questions, like really like more of a blitz, like
I've always been better at blitz chess than at regular chess. So okay,
amazing. What advice would you give to a sophisticated investor who wants to exposure but doesn't know where to begin?
Talk to us. Mineral-intel.com. Stay tuned. We're going to have a full-up website dealing exactly with this.
Amazing. If you were running U.S. critical minerals policy for 12 months, what would you change first?
12 months and it's not a lot of time, but what I would do is I would processing. I would strike strategic partnerships overseas to put processing there for us.
What is one non-obvious metal that you think will matter far more than the market currently believes?
Great question. I would say lithium. Even though we think lithium is important, I think lithium is going to be even more important than we think it is.
What's the biggest myth in mining or geopolitics that drives you crazy?
That you can get a mine running before the next election cycle. It drives me nuts.
Well, I mean, we talked about it, like, so I'll skip the most underestimated country because we talked about India, but maybe other country besides India.
The most
underestimated country in the mining world.
I'm going to cheat and I'm going to say that it's not a country, it's the world ocean. I am a firm believer that 10 years from now, seabed mining is going to be a flourishing business globally. And I think it's probably the one that almost no one believes is legit.
Most overhyped metal?
Gold.
One company you respect even if you don't invest.
Oh, that's a good one. South 32. It's a BHP spinoff. I like them. They're still very aggressive, very hungry for new deposits. I like them a lot.
Are we headed towards commodity-backed currencies?
I mean, I would argue most oil producers in the world today already have oil-backed currencies, but I think, even more so. That will probably happen, yeah.
China in 10 years, stronger, weaker, or unchanged?
Depends on whether Xi Jinping's still in power and whether they go after Taiwan. So range of options is huge.
Would the U.S. ever catch up in processing?
No. Thankfully, we don't have to. We just have to put it abroad.
Something bullish nobody is talking about.
That's a tough one.
Intuitively.
Something bullish nobody. I would go back to seabed mining. I think people still think it's a hoax.
And the last question, which is probably one of the most important in life, what is the meaning of life to you, Mikhail?
Meaning of life to me is to get up every morning, be excited about what I'm going to do during the day, and knowing that my kids are going to live in a world that hopefully I would have improved a tiny, tiny bit.
Amazing. I wish you success. I think what you're doing is really exciting. There's definitely like a lot of things which I learned today. I hope people who are listening to you, like the people who view it on YouTube or who listen to podcasts, will also like have a great time. And besides your website, where you spend most of your time? LinkedIn, Twitter, where they can find you easier?
I'm only emerging from my hole after many years in the corporate world. So I think more and more on LinkedIn, mining conferences, and increasingly the website.
Perfect. Thank you so much for your knowledge. Thank you so much for sharing it with us. And I sincerely wish you grow to a multi-billion-dollar conglomerate, and then we improve the situation in the United States with mining, processing, and exploration.
From your lips to God's ears. Thank you.
Thank you so much.
Thank you.